Welcome to Epoch Trades, where we trade the new age. Today we're going to be covering higher time frame levels on Comp, specifically the monthly and weekly levels. So, as always, our key level criteria, what we look for is swing highs and swing lows, multiple rejections, acted as support and resistance, drastic moves away, obvious to spot, and recently formed. So let's go ahead and dive right in. Our first key level that we can notice is this key monthly resistance level forming at the swing high. Now, all the other areas of price that we can see here is a little bit noisy and we can't really define a clear level. We can see a level here that maybe we can draw in a zone on these candle closes. And we can see that we have seen price react to this level as support as price broke through, a reaction here from this wick, a reaction here from this wick. We see multiple reactions to the same level. So let's go ahead and jump into the weekly and fine tune our levels. So now, here on the weekly chart, what can we see? Well, this monthly key level here, we notice the long wick here, the wicks here, we see it hold here and fake out before a bullish momentum candle comes back up. We see a reaction here, and we see a reaction here. So this is a very key level as we see multiple reactions to the same level. So as price comes back up, we can expect to see a reaction at the same level. Now, what else can we see? Well, if we line up our chart like this, we notice that price makes multiple reactions to the same level. So, let's try and draw in a zone and see how it looks. Just like that. And we can see price came up and rejected the level from these wicks here. Rejected with the wicks here. Price came up and closed right at the top of our level where we plotted our zone. Rejected and broke through. This price came down with this bearish momentum candle. It did break right through, which is confirming that although these key levels can tell us where price may react, price can also just break right through. So that's why we always want to wait for candlesticks to form like these ones here that tell us price is reacting to the same level through the candlesticks, which shows confirmation. And after we've seen a bearish momentum candle form, getting rejected from this key level, we had a bearish bias as we see price continued to fall down. So, what do we see here? Well, we can see a swing low right here, which would represent a key level as price came back down, and we would want to see a reaction. But we notice that price actually broke right through. Price broke right through on this candle, but we noticed that there wasn't a lot of volume on it, so we expected a pullback to the same key level. Now, after price reacted to the same level as it was once support flipped into resistance, we see bearish momentum pick up through this candle here, which showed us confirmation that an uptrend is no longer valid and continuation of the downtrend is in play. So, what can we see on our most recent price action? Well, we can see here on this lower high, it got rejected quite drastically, sending price to new lower lows. So, let's go ahead and plot this key level here. As price came up and got rejected, and if we actually extend this, we can see that price actually held this level as support briefly for a few weeks as these long wicks reacted to the level and then price broke through, pulling back to the same key level we saw reacting over here. But we always wait for candlesticks to form to show us what the market's hand is. So the market always leaves clues and tells us what it will do next, what it may do next. As price continues to fall, we notice that it formed a swing low, and this is the lowest point price has reached. So we put a key level right here. As the next time price comes down to this key level, we expect another reaction. So now that we have plotted all the key levels, I notice one right away. We see right here, prices come down and reversed drastically. As price came back down, we've seen a reaction from the same key level, causing a bounce before price initially broke right through. So as price comes back up, we notice all the key levels on our chart. Price can react to any of these key levels that we have plotted, so it's always good to extend these key levels past price so that we know where price may react to in the future. These are all good things to have plotted on your charts to add some structure to the market, because if we don't have these key levels, we aren't really aware where price may react. But since we have these key levels, we know where people may react in the market. So if you guys enjoyed this video and got some value out of it, I'd appreciate it if you hit that like button and subscribe for more videos like this.